What's up, old Justice? Work it, baby. Take it the way you like. I'm ready to be bad. I need a bad girl. Get at me, bad girl. Let's have a little fun. That's all. Let's have a little fun. All right, so let me show y'all some stuff, man. Hold on, I'm gonna show you guys some stuff, man. What is up? What is up? What is up? How you doing, Mo Justice? How you doing, Hanlon brother, Hanlon Jones? What's up, man? I see y'all in the building. So there's a number of things that could happen right now. One, I could show you how I'm making this little fun thing, man, with this Reface app, which I really think is pretty cool. I'm making Giphies and kind of shorten them up and having fun with that. Or we could do some investment training, or we could talk about politics. Uh, there's some things on China I've been wanting to watch. How about that, y'all? Y'all want to watch the stuff on China? That'd be fun. That'd be real fun, man. Before we start that, let's watch some Missy, and then we'll kick this off. We're gonna watch the Chinese stuff, man. Cool, 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 cool. Yeah, let's go for it, man. Let's go. Merrick. It's actually Merck. Okay. Hello, Jacksonville.
NIH researcher Matthew Hall says that's why the work going on now could also benefit us down the line.
From a pandemic preparation point of view, we need to develop antivirals now so that when something else occurs, a different kind of virus that breaks out somewhere else in the world, or that, COVID-27 that we all sort of joking but not joking talk about, we're ready for it and that we've got options on the table to really quickly respond.
You already said COVID-27? Hold on, let me rewind that, man. Did you hear what he just said? You hear what he just said? Hold on a second. He said COVID-27. Did y'all hear that?
NIH researcher Matthew Hall says that's why the work going on now could also benefit us down the line.
From a pandemic preparation point of view, we need to develop antivirals now so that when something else occurs, a different kind of virus that breaks out somewhere else in the world, or that, COVID-27 that we all sort of joking but not joking talk about, we're ready for it and that we've got options on the table to really quickly respond.
That dude said COVID-27. All right, let's take a look at those companies, man, that actually they spoke of. They spoke of Merck and Pfizer. Let's take a look at them, man, and see what kind of companies they look like. So I'm going to go to Yahoo Finance. Yahoo Finance. Something Yahoo is still good for. Not much, but it's still good for Yahoo, for stock market quotes, stuff like that. So I'll look at this, man. The futures market's up. So that means we look like we may have a pretty good day. So let's look with Merck. It's MERCK, Merck Company, or MRK. Let's look at the financials on Merck. Oh, wow. Okay. So Merck has a PE ratio of 26. It's got a beta of 0.43. So let's break down what this stuff means. Oh, wow. 1 year target estimate of 96 bucks. So if it's traded at $74 now, and we have an estimate of $96.33, let's look at the potential gain in this stock. So first, I'm going to write. Let me put that to the side. So there's a bunch of information that I want to look at right now when we look at this particular stock. I know some people ask me to talk about stocks, so I want to talk about stocks, man. All right, so let's look at it. Let's say I'll put PE ratio of PE 26, and it's looking like it's going to be trading at, they say, got 1 year target on it of 96 bucks. And right now it's trading at 74. All right, so let's look to see what else about this stock. It looks pretty good. It's got a beta of 0.43. So what the beta is for every point that the S&P moves, this is a correlation number. Does anybody know what correlation means? Anybody know what correlation means? Here, I'm gonna put a link out, man. So see if anybody wants to come up, man. I'm gonna send it to Mr. Black too. Mr. Black might be interested in coming up, man. See if anybody else is interested in coming up and put the link out. Put the link out. Send a link to a couple friends, man, as well. So hang on a second. Hold on, Mr. Black. Okay. Sent the thing to Mr. Black. See if he's interested in coming out. And who else got sent this to? I don't know, man. It's out there, man. So, Merck, they said that Merck has a potential of, they have a potential drug that's going to be dropping an oral antiviral medicine. I wonder if it works the same way as the other ones, with the mRNA. Not sure, but let's take a look and see what the potential gain is in this overall stock. So, the target 96.33. So let's go to a calculator. So let's go 96.33 minus 74.14. That equals 22.19. And we're going to divide that by 74.14. So that's almost 30% gain. That's 30% you can make in the stock. Wow. Look at that, man. That stock you can buy right now and make 30%. All right. So let's put that down. Let's put that in a Google sheet. Merck. Put that in my own Google sheet. Stuff I'm gonna be buying in my Cash App. A lot of people don't realize, man, your Cash App, you can buy things, man, cheap. I mean, like for free almost. You can buy it in $1 increments. Just kept putting that out there, man. So let's see what else. Let's go back. Let's take a look at some more stocks that may be good buys. What was the other one? Let's look at some insurance. Well, no, hold on. We're gonna stay in this industry. So we got Merck. Fair value. It's right at. Looks like everything's right on target. You also have Procter & Gamble, Bristol Myers. Look at this, Pfizer. Pfizer's a little cheaper, but so let's look at Pfizer. Oh, wow, it's got lower P ratio. So what a P ratio is price to earnings ratio. And we really want we want as low as possible, as close to 1. So let's see, it pays dividend of 4%. So that means just by owning the stock, you're going to make 4.5% dividend. So every quarter it's going to pay you a quarter of $1.56. Right now, that's what the target is. It's got a beta that's a little higher correlated to the S&P 500. So the S&P 500 moves 1. This is going to move 0.62. Earnings per share 1.71, which is good. It means for every share that you own, it actually makes $1.71. Okay, market cap is 192 billion. So this is a large cap stock. We generally want to look at small to medium cap stocks. And the reason why we want to look at small to medium caps is because they're easier to double. We also like those. I like the small to medium cap stocks because I look at this, it's overvalued. That's what they put the fair value on it as overvalued. Okay. JP Morgan Chase. No, I don't like that. It's not the same thing. Let's go back. And what else? Johnson & Johnson. Let's look at that one. Again, another overvalued stock. Let's see, that's what the estimate is. He has got a higher P ratio of 28, earnings per share of $5, which is good. The dividend is not as high, so just for owning the stock, we don't make that much money. Reason why it's cheap is because it's real. Generally, the more information we know about a stock, or know about a vaccine, or know about something, the the more we know about it, the less chance there is for the less chance there is to make efficiencies or to make money in a stock. It's something called the efficient market theory. It's by it's Professors Miller and Modigliani. They actually came up with this theory. They won a Nobel Prize for it. And it says it's the efficient market theory. And efficient market theory is the more we know about a particular stock, or the more we know about something, the less chance there is to find arbitrage. So right now, that looks like there's a potential rollout of the stock. So because of that, or the rollout of this vaccine, um, that's why. That would be a reason why. So if I were you, or this is what something that I'm going to do, it's entirely, you can do whatever you want to do, but a long-term play would be to buy Merck in your Cash App. You can buy it, take about $5 worth, man, $10 worth. It's going to move. Your correlation is going to move alongside with that. So let's say you buy $10 worth, and it looks like it's going to have a 29% return. That means you're going to make $3. You know, that's cool, man. Let $10 turn to 13 without doing anything. You know what I'm saying? So hold on a second. Let me call Mr. Black, man, real quick, see if he wants to jump on. Hang on a second. Let's put some music on while we wait. Hold on a second. Mute up. Did you guys hear any of that at all, man? You know what I'm saying? Hold on, let's try this again, man. I want to see what's going on, man. Oh, shit, man. Dude. Hold on a second. Hell no, you couldn't hear that shit, man. Hold on a second, man. Shit, screen. Okay. Dude. Shit, audio. Did you guys hear any of that at all, man? All right, here we go. You know what I'm saying? Let's try this again. Let's try this again, man. I want to see what's going on, man. Oh, shit. Dude. Hold on a second.
Because of what I do with a gotta get yours. I gotta get mine. Yeah, bro. Gotta get yours. I gotta get mine. And a house. You gotta get yours. I gotta get mine. 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 Get yours. Smooth as I wanna be, but with me use a corner. Oh, that's the way it is. Fuck yeah, and that's the way it's gonna be. Why? Puffing up on the dank and drinking mad brew. Taking names, and after that I'm kicking ass to breathe. Time to flow. And I get a rhyme to go. Hey, yeah, pocket, and I'll sit back, straight up, design it slow. They used to see a young nigga come up, another punk run up, he'll have to get his gun up, cause I ain't taking no shorts. Like a Newport for exploding the floor, like Jordan exploding on the hoop court. And I don't wanna be nothing like Mike, cause even Mike was like it's an itty bitty wet trifling. And when you in the spotlight, you get shot, right? But you're not tight, huh? Fucking anybody who fuck with mine. When will they realize I'm straight out to get mine? You gotta get yours. I gotta get mine. 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 Get yours. I keep my mind on my money, money on my mind. Finger on the trigger, nigga, hand on my nine, smoking blunts of skunk, making holes of pumps and only underground funk bumping out of my trunk. Little life of a hustler, high till I die. Meeting bitches, getting bitches, miss me with lies, picture me living out my life as a buster. I'd rather pop up a shot for my Glock and blast motherfuckers. I live a thug life, baby, I'm hopeless.
And beyond. Is there really a mass exodus taking place, or is it all a myth? Welcome in Silicon Valley star investor and host of the All In podcast, Jason Calacanis, joining us tonight. It's good to see you. You heard the senator. These states and cities don't need any more money. Is he right?
Well, I mean, San Francisco is a complete disaster right now. The number of people who've left during COVID is just nothing short of stunning. The number of restaurants that have shut down. And really, in my job as an early stage investor, what we're seeing is young people don't want to come here anymore. And they don't think they need to come here anymore because of remote work and because people are funding companies over Zoom. And you know what? They're right. So I would say I follow where young, ambitious people want to go, both artists and entrepreneurs, and they do not want to come to San Francisco right now. It's too expensive. It's too dangerous. They want to go to Miami. They want to go to Austin. They want to go to New York. They want to go to LA, Nashville, anywhere but San Francisco. I think it's a 5 to 10 year slide down.
Wow, that's a long period of time. You've been railing on this issue on Twitter and elsewhere on your podcast for months. We're going to show some of the tweets right now. San Francisco devolution compounded with crime, cost, and homelessness. The pandemic, executives and high tax-paying companies are leaving. You talk about home sales are at a 20-year peak in the city. Is it temporary or is it permanent?
I think this is a 5 to 10 year story. We had an incredible run up where young people wanted to be here and they wanted to start their companies here. But that
I almost went to San Francisco,
turned
man.
out to be a false narrative. We all bought
What's
into
up?
this
What's up,
vision
Smith
that
Sunday?
we
How
were
you
gonna build
doing?
an at-scale company, the next Uber, Airbnb, Twitter. You needed to be here. You needed to be near the venture capitalists. You needed to be near the, alumni of these great companies.
It's a money center,
and now,
man.
because 100% of people
So let me tell you
have
guys a
embraced remote
concept.
work.
This is a
They
concept.
simply do not need to be here.
This is a
And the
concept
government
of
is
the money
completely
center.
dysfunctional. And actually, San Francisco's
Hold on a
government
second.
and a poor
The concept of the money center. There's a thing called velocity of money. Have you heard of it? Have you heard of the velocity of money? It's the closer money is to its center, the faster the velocity is, meaning the faster it can turn over. So, let's say here's an example. I get paid, and there is a grocery store right next to me. So eventually, immediately, my money goes right to that grocery store. Then that grocery store then takes that money and it goes out and it buys different products. So it slows down. So the closer that I am to the source of money is at the velocity. So the source of money, and if we want to look at like places to invest in or companies to invest or places or companies to invest, you want to look at companies or places where the velocity of money is fast. So look at money centers. Money centers are places where they create money. Where are some places they create money? The money is created um, at the Federal Reserve, the place where Federal Reserve banks are. San Francisco is a home of Federal Reserve Bank. Where else is a home of Federal Reserve Bank? Atlanta, that's another home of Federal Reserve Bank. Chicago, I believe Cleveland. Let's take a look and see real quick. Let's type in Federal Reserve Bank locations. There we go.
We've talked about the Federal Reserve as our decentralized central bank.
And you know that part of that decentralization is that the Fed has 12 regional reserve banks spread throughout the country. But there's more to it than that.
Right. The Federal Reserve is made up of three major parts: the Board of Governors, those reserve banks we talked about, and the Federal Open Market Committee.
As we take a closer look at that structure, you'll see that it's a blend of parts that are decentralized and parts that are centralized, like the Board of Governors.
The Board of Governors in Washington oversees the Federal Reserve System. There are 7 members, including the chairman.
Members of the Board of Governors are appointed by the President of the United States and confirmed by the Senate. They serve 14-year terms of office.
Specifically, the Board of Governors oversees the Federal Reserve System and is part of the process for making monetary policy, part of the process for making the regulations and supervisory decisions that the Federal Reserve makes to try to preserve a stable financial system.
Our country is vast, and different regions of the country have different economies. Because of that, each of the 12 reserve banks is different. Each reflects the economy and points of view of its region. And many of these reserve banks have branches too.
We provide services to the banks in the region. We supervise and regulate those banks. And lastly, we are deeply involved in our regions in terms of economic development and community development. That can happen from one central point.
You see that? You heard what I
Diversity
said?
of the 12 regional banks is the
You heard what I
strength of the
said?
Federal Reserve System.
You heard what he said? He said they do economic development. So immediately, again, that is a money center. So Philadelphia is where they create money. So look for economic development. If you're looking for money, if you're looking for money for a business, money for a startup, money for anything, you want to go to a place where there is a Federal Reserve Bank.
Central point. The diversity of the 12 regional banks is the strength of the Federal Reserve System.
Staff members stay in touch with local business people and other folks in their communities, and they listen to their concerns.
This is how we help small companies.
Each reserve bank has a 9-member board of directors. 3 directors are bankers. The other 6 directors are citizens who work outside banking. 6 directors are elected by member banks in the district. The other 3 directors are appointed by the Board of Governors in Washington. Of the 3 directors appointed by the Board of Governors, 1 will serve as chair and 1 will serve as deputy chair of the board.
The Federal Open Market Committee, known as the FOMC, is the group within the Fed that sets monetary policy.
The 7 members of the Board of Governors and all 12 Reserve Bank presidents, including those who aren't voting members, attend FOMC meetings. Though they all participate in the discussions of the economy and policy options, only the 7 members of the Board of Governors and 5 of the 12 Reserve Bank presidents are voting members at any one time.
One of the 5 voting presidents is always the president of the Federal Reserve Bank of New York. The other Federal Reserve Bank presidents vote on the FOMC on a rotating basis.
The Federal Open Market Committee is a group that has been charged with making decisions about the stance of policy. And it consists of the governors who serve on the Board of Governors and the 12 presidents of the Federal Reserve Banks. And of those 12, all attend, but 5 vote at any particular time. And the presidents in particular collect a great deal of information about business conditions and labor market conditions, economic conditions, financial conditions in their districts. When we meet, we go around the table and each person describes their perspective on the economy. And my job as chair is to try to find a consensus in the committee for what is an appropriate stance of policy for the day.
One really important thing to remember is that though the Federal Reserve is in part a government agency, it's independent within the government. To keep the Fed independent from political pressures, members of the Board of Governors are appointed for very long terms, 14 years. Also, elected officials and members of the president's administration can't serve on the board. Beyond that, the Federal Reserve doesn't get its funding through the congressional budgetary process, which can be influenced by politics. Its funding comes mostly from interest earned on government securities it holds and the fees it charges for the financial services it provides.
Monetary policy takes a long time to have its effects on the economy. Actions we take today may not have their full effects for 2 or 3 years or more, depending on the state of the economy. Whereas politicians, of course, are always looking to the next election, which can be only a few months away. So it's really important that we not be influenced by those political considerations, that we make our decisions based only on what's best for the U.S. economy and only what's best in the longer term.
Okay. Hey, yeah, good night, y'all.